Okay, everyone, welcome back to the Price Action Labs YouTube channel. Here we're going to be going over my favorite indicator to use in the markets, and we're also going to be combining this with order flow. So what is my favorite trading indicator? Well, it's this one over here, PO3 by 2 degrees, right? So we are actually going to be understanding the power of the weekly power of 3, right? This is very, very important to understand. So if we just bring this up on the charts, just to give people a little bit of context, right? So when you're looking for these A plus trades, you typically need to look for the correct fair value gap to trade from. So the correct fair value gap to trade from, right? What makes an A plus fair value gap? We're going to be going over this in this video before going on the ATAS platform and validating our fair value gap. So when you're looking for an A plus fair value gap, what you are looking for is you're looking for where it is in conjunction with the weekly opening price. And that comes from obviously the PO3 indicator. And we're also going to be going over how you can use liquidity to your advantage, right? These are the two most important things, right? So just to kind of bring some context, this is ES on the 15-minute time frame. My fair value gaps are always on the 15-minute time frame. It's important to understand that. Now, once you have that in place, what you are looking for essentially is you're looking for Tuesday to sweep Monday's high. This is something that happens almost every single week, and you need to learn to train your eye to see this. So here we have Monday's low over here, right? This was Monday's low. I'm going to call this the PDL or the previous day low. Once you have your previous day low swept, you're typically looking for Tuesday to take out Monday's low like this before giving you some internal market structure shift over here, right? This is very, very important to understand. Once you have a previous day low sweep, this validates the M15 fair value gap. Now from here, if we just kind of dive in deeper, because I get lots of questions on this, so I'm going to break this down for everybody, right? This is my area of imbalance. What I want traders to understand is that we have the imbalance that's always marked as the candle before the actual fair value gap. So we are using this region over here. So this is the candle. This is the order block, you can call it, or the POI, right? Let's just call this POI. This is the point of interest. Now, what makes a point of interest A plus is three things, right? I want traders to understand is there's three things that make a POI A plus or high probability. It needs to leave a fair value gap. It needs to sweep liquidity. So in this case, it swept the previous day low. And the third most important thing is it needs to be below the weekly opening price. So we're going to be going over the what or the weekly opening price very, very shortly. But we've taken out the previous day low. So we've had a major liquidity sweep. We've left a fair value gap just over here. So fair value gap, liquidity sweep, and it is below the weekly opening price. And this is something we're going to go over right now. So remember, whenever you're choosing POIs, always remember these three rules, right? This is very important to understand, right? So now we see price rejecting this POI over here, right? So we had an amazing trade you could have taken here, and we had a second re-entry trade over here. So now we go down to the 5-minute time frame, and what we're looking for, let's replay price and understand a few things, right? So this is now the weekly opening price over here, right? This is the weekly opening price. So what you are looking for essentially is you are looking for price to come below this weekly opening price, tap into a POI, and then give us confirmation, right? So it's the confirmation that causes a lot of traders to lose their trades, right? So I was talking to a bunch of traders in the mentorship, and what they're talking about is they get to a fair value gap and they're unaware of whether price is going to move up or down, right? So obviously the market has only two buttons, buy or sell. So you need to understand what's going on with the buyers and sellers. It's common sense, but a lot of people just disregard this completely. So again, this is our weekly power of three. And notice how the weekly power of three for Tuesday is very, very similar to the daily power of three. So the daily power of three is of course bearish. And we also have price giving us a bearish weekly profile at the moment. A couple of other things to remember over here. We also have the Asian range high that's intact, right? For those who have been trading a little bit longer than 1 to 2 years, you'll know the price always gravitates towards the Asian range high. So that's something you want to keep in mind as well. So the Asian range high is definitely something you want to keep an eye on. Now from here, price on the 5-minute time frame, let's go down to the 1-minute time frame. So on the 1-minute time frame, we can see we've entered this 15-minute fair value gap. This is our 15-minute POI. So what we're essentially looking for is we are looking for price to come in and give us a double mitigation, right? So let's just break this down. I always want to see price enter on the 1-minute time frame with a body. This is very important to understand. So notice how we have some equal lows over here. This is kind of step one. So we're looking for a mitigation and a sweep of liquidity. We get that just over here, right? So now from here, we can see prices enter with a body, and we're looking for a break of this POI. But how can you confirm that this POI is actually going to hold, right? Because the indicator itself is quite frankly only an indicator. We need to have confirmation, and it's the confirmation that traders are missing. So one thing I do when I'm in session is I go down and I want to see a 4-hour power of three. So the 4-hour power of three is very, very important to understand. So notice how we've had a mitigation and we have some equal lows that are being swept. Now, once you have those equal lows that have been swept, we see our initial rejection from this area. It is from this region do we now go to the ATAS platform, and we're going to break this down in terms of the buyers and sellers. So we see the exact same price action, the same fair value gap, and we're now looking on the 1 minute time frame or the 5 minute time frame. In this case, we'll use the 5 minute time frame because ATAS conveniently hasn't allowed me to go back to the 1 minute time frame. So now we go down to the ATAS platform. We are understanding this price action over here, right? So this price action is basically the same as this price action. Now from here, we're going to be breaking this down and we are going to understand something over here. We are going to understand that we had a lot of aggressive sellers at this area, but none of them were rewarded. I want traders to understand we had 790 for 690, right? We had 151 for 0. We had so many more aggressive sellers than buyers. Despite that, the market was still able to find an area of demand or an area of support. So this POI has actually shown a demand area, right? We see buyers holding. We see buyers in control because the sellers have failed. The sellers have been exhausted, right? They've been absorbed and exhausted, right? Look at this kind of green candle over here. This green candle had a ton of buyers at the top, but we had a ton of aggressive sellers down here. None of these aggressive sellers were rewarded at this level. So this kind of confirms our POI to be completely correct, right? We're also below the weekly opening price, which gives us a massive confirmation. Now from here, let's go back to the original 1 minute time frame. So what we've established here as traders is that these sellers are very much failing at this area. Sellers are in control, but they're not in control. They're aggressive, but the buyers have stepped in as passive buyers, right? This is important to understand. Another confirmation I use in my trading is that we had a 1 minute fair value gap resting over here. This is kind of a 1 minute fair value gap. Price came in below this 1 minute fair value gap. And again, we had aggressive sellers failing here, aggressive sellers failing over here. So how I like to trade is now that I've seen price breaking above this 1 minute fair value gap, we have a break at some point, I believe over here. There you go. So we can take a long position from here with a stop loss just below these local wicks. Notice how we're buying or we've had confirmation below the 10 a.m. Eastern. So now from here, where do we target, right? Targets are a very important question. So if we just go up to the 5 minute time frame, on the 5 minute time frame, I like to target the most local fair value gap, right? This is very important. So price eventually did rally all the way up here, but I like to take partials along the way because, of course, as a trader, you want to pay yourself. So the way you do that essentially is by understanding one very, very basic thing, right? You're looking for fair value gaps to trade from, right? And you're looking for fair value gaps to target. So we had this fair value gap here on the 5 minute time frame. So this was my first initial kind of target, right? So if we continue to play price on, we get a very, very rapid move to the upside over here. Simply following order flow, fair value gaps, and the power of three indicator, right? This is important to understand. Again, if we go back to the ATAS platform is giving us the indication to buy, right? Why is the ATAS platform giving us indication to buy, right? So we're understanding the volume in terms of buying and selling, right? We see huge amount of selling volume, but these sellers are not being rewarded. So when sellers don't get rewarded, you're essentially looking to take the opposing end, right? This is the correct way to look at markets. You want to understand who is aggressive and who is passive, right? Sellers are aggressive because they're hitting the bid aggressively. There's more bid participants than ask participants, but none of them are being rewarded. This tells you that buyers are very, very much in control. This tells you that this zone was very, very active. Again, just over here, we saw a fair value gap and price eventually came back into this area. When price came back into this area, we saw again a ton of aggressive sellers at the bottom below the 10 a.m. Eastern. We see 819 for 515. We see a lot of aggressive sellers. We see the volume is situated towards sellers, but none of them are being rewarded, which means at this area, as well as this area, we had passive buyers propping up. And this is the reason why price moves higher in the first place, because of these passive buyers. So now we go back to the overall candlestick chart, right? What we're looking for again is this exact same candle over here, right? This candle over here, similar to this area over here, what we're seeing is we're seeing a ton of sellers trapped in this region. This is below the 10 a.m. Eastern, which is extra confirmation, right? So we could have taken our second long trade over here with a comfortable stop loss below this area. Now from here, we simply look to target the weekly opening price. Sorry. So we're looking for the weekly opening price. So let's go back to that weekly power of 3, which is kind of the main thing for this video, right? The weekly opening price was all the way up here, right? This is the weekly opening price. So if we continue to play price on, we can see price rally to the upside. So we had 2 neat trades to the upside, all using fair value gaps, order flow, and ICT. So if you like more videos like this, just give this a like and thumbs up, and I look forward to seeing all of you in the next one.